Ms. Goyal, appreciate you joining us here. We are still awaiting the official release from S&P, but this is source-based information that both the outlook as well as the rating remain unchanged. This in the backdrop of what we saw come in from Moody's. So expectedly some degree of disappointment within government circles. They were hoping that the rating agencies would be consistent in their approach to India. Your first reaction?
And I think it will be a loss of credibility for S&P in the long term. So they should worry more than we should.
Why would you say that, ma'am? I mean, they're free to have a different opinion on this from Moody's, aren't they?
Yes, absolutely. They are free, but they should have a realistic assessment of risks. And if they are not responding to positive news from India or to fundamental structural reforms that are improving long-term prospects, and they are behind the curve, then that shows negligence or incorrect assessment on their part. Which will
I'll go back again.
Yeah,
I'll go back, ma'am, to what S&P said in 2016 when it spoke of the outlook. And it said upward pressure on the ratings could build if the government's reforms markedly improve its general government fiscal outturns and with them the level of net general government debt so that it falls below 60% of GDP. So that is what it had listed in 2016 as what would in fact push them to move for an upward revision. So clearly that continues to be a concern, one would imagine, if the rating as well as the outlook remains where it is.
Yes, but they need to recognize that India has one of the highest sort of growth rates in the world now and highest sort of potential growth rate, the young population. And that means that the debt ratio is well set towards reducing, right? Because the real interest rate is much lower than the growth rate. And the fiscal deficit also, the government has demonstrated its commitment towards the consolidation path committed to the FRBN. So, and also debt ratio as it is in India is much lower than it is in many Western economies, although it's larger than some East Asian emerging markets. So it's not such a big concern. And given that they see these as, they should also recognize that the current reforms have substantially improved the tax base and issued GST as well as the information on income tax from demonetization. So that also, and there are some signs that the tax elasticity is rising, and therefore that also will help bring down debt ratio.